you are waiting for the perfect time to buy in the GTA, this real estate market report for the month of May should worry you. Because while everyone is watching prices and waiting for prices to drop, the number of homes for sale is shrinking fast. So 6 months from now, some buyers will wish they acted today. Because the market is starting to change before most people realize it. The latest strat numbers shows that sales are increasing. At the same time, new listings have dropped nearly 19%, and active listings are down more than 13%. That means more buyers are purchasing homes, fewer sellers are listing their homes in the market, and that extra inventory that has been piling up is gradually getting absorbed. Now, this does not mean we are suddenly entering a bidding war, but it does mean buyers have fewer options today than they had a year ago. And if this trend continues through the second half of this year, buyers who are waiting for better conditions may find out that the home they wanted are no longer available, or that competition has become much stronger. So in this video, let's break down exactly what these numbers are telling us, why inventory is becoming the story nobody's talking about, and what buyers and sellers in the GTA should be paying attention right now. Before we dive into the housing market, let's zoom out for a minute and look at the bigger picture. Because what's happening in real estate is heavily influenced by what's happening in the broader economy. So Canada's economy actually got smaller at the end of 2025. And when that happens, people naturally become a little bit more careful with their money. Think about it. If you are uncertain about the economy, your job, and what's coming next, are you rushing out to make $1 million purchase? Probably not. That's why economic growth matters to housing. When confidence falls, buyers tend to step back and wait for more certainty. Toronto's job market is still feeling some pressure. Employment was down slightly, and unemployment is sitting at 8.1%. It means there are people who would love to buy a home right now, but they are choosing to wait until they feel more secure about their job or finances. And when some buyers step back, competition naturally becomes a little lighter. Now, let's talk about something a little bit more positive, inflation. Inflation now is sitting at 2.4%, which is pretty close to where the Bank of Canada wants it to be. It means there is currently very little reason for the Bank of Canada to start raising interest rate again. For now, the overnight rate is holding steady at 2.3%. It's not a guarantee of what happens next, but it's definitely a more stable environment than what we saw over the past few years. Mortgage rates are still higher than what many people got used to a few years ago, but they are also not moving dramatically higher right now. So if you're thinking of buying, it means the cost of borrowing has become a lot more predictable. And with inflation largely under control, many economists expect rates to gradually come down over time rather than move up. Nobody has the crystal ball, but the conversation today is very different from what it was during the rate hike cycle. Back then, people were worried about rates going higher every few months. But today, many buyers are asking when rates might start easing instead. By the way, I'm Ilham Ibrahim, a real estate agent here in the GTA. If you are thinking about buying or selling and you need some guidance that is specific to your situation, feel free to reach out to me. I would be happy to have a chat with you. Now let's talk about what's actually happening in the GTA housing market. And the first place I always look is sales, because sales tells us what buyers actually doing, not what they are thinking and not what they are saying, what they are actually doing with their money. In May, 6,583 homes sold across the GTA. That's 6.3% higher than the same time last year. This tells us more buyers decided to move forward this spring after spending months sitting on the sideline, waiting for rates and prices and more certainty and confidence. Many are finally taking action. But here's the number that really caught my attention is sales were up 10% compared to April. Think about it for a second. This isn't just a year-over-year improvement because last year was a weak year. The market is gaining momentum right now. More buyers entering the market in May than in April. And that's happening while many people are still talking about uncertainty. That's why this matters. When buyer activity starts increasing month after month, it can be an early sign that confidence is slowly returning. For sellers, that's encouraging news because demand is improving. For buyers, it means the opportunities we're seeing today may not look exactly the same a few months from now. The market is not overheated, but it's definitely showing more signs of life than it was years ago. Now, here's the number that I think tells the biggest story right now. New listings. New listings across the GTA came in at 17,698 in May. That almost 19% lower than the same time last year. That means fewer homeowners are putting their properties on the market. And when fewer homes are available, buyers naturally have fewer options to choose from. But it doesn't stop there. Total active listings are also down more than 13% from last year. And compared to April, new listings dropped another 2%. So this isn't just 1 month fluctuation. We are seeing inventory gradually shrinking while buyer activity is picking up. When more buyers are buying homes and fewer sellers are listing homes, the balance of the market starts to shift. We are not in a seller market yet, but we are definitely moving away from extremely buyer-friendly condition we have had over the last couple of years. Now let's talk about days on the market. The average home is taking about 27 days to receive a firm offer, but roughly 42 days from listing to sales. And that means buyers still have time to do their homework, negotiate, and make thoughtful decisions. But if a home is priced properly and presented well, it is still attracting attention. The market is not stuck. It's just become a lot more selective. The homes that are priced right are moving, and the ones that are not are sitting for longer time on the market. Now let's talk about prices, because this is where buyers and sellers usually see the market very differently. The average GTA home sold for just under $1 million in May. That's about 4.6% lower than it was a year ago. That means if you are buying today compared to last year, you are paying roughly $50,000 less for the average home. That's not a small difference. That's a real money that stays in your pocket. And when we look at the home price index, which gives us a more accurate picture of what's happening across the different property type, prices are down even more, around 6.7% year over year. In other words, buyers today are still shopping in a market where prices have come down meaningfully from their highs. Compared to April, prices actually moved up slightly. That means the prices maybe starting to stabilize. And when combine that with rising sales and shrinking inventory, it starts to paint a different picture than one we saw years ago. So if sales continue improving while listings remain limited, prices could start leveling off and eventually move higher. See, I don't believe we are at a point where prices are about to take off, but I also don't think we are far from a point where buyers stop getting better deals simply by waiting. The biggest discount may already be behind us, and that's something both buyers and sellers should be paying attention to. So what does all this actually mean for you if you are buying or selling in the GTA today. Let's just start with buyers. If I were a buyer looking at this market, I would see lots of opportunities. Prices are still below where they were a year ago. Competition is now here near what we saw in 21 and 22. Interest rates have become much more stable. And while there's still inventory available, the number of homes coming on the market is shrinking. That's important because I don't think the biggest risk for buyers right now is overpricing. The biggest risk might be assuming these conditions will still be there 6 months from now. If sales keep rising and inventory keeps falling, buyers could find themselves competing with more people for a few homes. And honestly, that's one of the reasons many serious buyers are stepping into the market today. They are realizing that the opportunity is still there, but it may not stay this forever. Now, if you are a seller, don't get too caught up in the headlines about prices being down compared to last year. The more important story right now is what is happening month to month. We are seeing signs of stabilization. Buyers are active, homes are selling, but prices is everything. The homes that are priced properly are attracting attention and selling. If you like this analysis, don't forget to subscribe to the channel and hit that notification button. And thank you for watching, and I'll see you in the next video.